Hi there, this is AJ Brown with Trading Trainer, and we have been in business since 2003. We've been educating beginners to advanced investors in the trading of stocks, ETFs, indexes, and most importantly, equity options. Today, I'm going to be featuring a symbol. It's ticker TEVA, and the company is TEVA Pharmaceuticals. To start off with, TEVA Pharmaceuticals is not a very popular name. It's not a name that's mentioned often by the talking heads out there in mainstream media, and rarely is it mentioned even on financial media. It's a company based in Israel that makes generic prescription drugs. They also do some research on their own types of drugs, but for the most part, they're just a big name manufacturer. It's a very boring company. Investors in this company don't tend to invest in the company for equity appreciation. They tend to invest in it more for either the long-term investment or for dividends when the company is offering dividends. As you can see on the chart, TEVA Pharmaceuticals is a sideways choppy pattern. Now, you may say to yourself, how can this be good for a long-term investment? I'm going to show you why I absolutely love sideways choppy moving symbols that are boring, not really mentioned in the mainstream media. These are the symbols that are going to create for me a monthly income, and I'm going to show you about that in a minute. But let me first finish with TEVA Pharmaceuticals. If I zoom out a little bit, like if I go to, say, a 2-year chart, you'll see that TEVA Pharmaceuticals, except for maybe a very slight trend, for the most part, just continues to go sideways. In fact, I've been trading TEVA Pharmaceuticals in the long term on and off for basically the last 10 plus years. That's how long TEVA Pharmaceuticals has been every month, like clockwork, paying me almost a dividend, not an official dividend, but I get a payback from owning TEVA Pharmaceuticals. So what am I doing here? Well, what I'm doing here is I am either going long or short this symbol, or I'm substituting that with buying a call or a put option, and then I'm renting it out every month. Now, let me take a step back before I explain any more about my trade on TEVA Pharmaceuticals and why I love this symbol so much, and really explain that by no means am I doing any sort of day trading. In fact, what I'm doing is end of day trading, and really, in order to manage my long-term investments, I only do 1 or 2 transactions per month. So this is really doable for anybody who's got something to do during the day. I come in the evenings, I look for my signals. If I get my signals, I'll set up a trade for the next day, and that's that. Okay, so coming back to TEVA Pharmaceuticals, one of the reasons why I like TEVA Pharmaceuticals is because the timing of the transactions, the trades, is really clearly defined by the fast MACD indicator. Now, the fast MACD indicator is one that I learned from Gerald and Marvin Appel, the MACD gurus. It's simply the MACD indicator, and instead of the normal 12, 26, 9 settings, it's the fast length of 6, the slow length of 19, and the MACD length of 3. The fast MACD lends itself well to these sideways choppy positions that tend to oscillate about once a month. So very good. I simply look for the MACD crossing its signal line, and I can see here on my Thinkorswim that's identified by arrows. And if I get that arrow in an evening, then I'll look to open up a position the next day. In setting up these positions, the first thing I want to do is set up my initial covering position. The first thing I like to decide is that initial covering position, what direction do I want to go? And I take cues from the sector and from the broad market. Right now, the broad market is clearly in a downtrend, so I probably want to be in the business of shorting for my initial position, shorting or buying a substitute put option. And so that's exactly what I did. In fact, you can see here I got a signal in order to do just that back on April 12th. And then on April 13th, we set up a trade for the next day. It actually didn't fill. And on April 14th, we got a fill. And I'll show you from my trade log exactly what I did. So I could have shorted TEVA, the stock, but instead I went ahead and bought a TEVA January 2023 $15 put. This particular put we selected so that it would act like the stock, but it would be inversely moving. So when the stock lost $1, this would gain $1. I paid $4.90 per share, and there are 100 option shares in every contract, and I went and purchased 20 contracts. So that comes out to about 2,000 shares, or just under a $10,000 investment. I did that on April 14th. Now, the next piece is fairly straightforward. I wait for the next signal. So you can see I waited about a month, and I got my next signal. And this is the signal where we set up for ourselves a trade zone that will guarantee us a monthly income, almost like a dividend. And so I set up the trade zone from about $7 to $11. Those were the collared strike prices. So as you can see here, I got my signal in the evening, and so I set up the automatic trade in order to sell myself a put and buy myself a call. I sell the $7 put. This put is a near-term put. It expires in the next 3 to 5 weeks. This one expired on June 17th. And then I go about 3 to 6 months out. In this case, I went with the September $11 call. So I sell the put, buy the call, and then I let time go by. And what's neat about that is on June 7th, I was able to sell that call that I bought. And on June 17th, that put that I sold expired worthless. So I made two sources of income here. I made 16 cents on the put that expired worthless, and on the protective call that I rolled out, well, I wound up making about 8 additional cents. In other words, for this month, I made 24 cents per share. And I'm in the process of doing it again. On June 24th, last Friday, I got my signal, and so yesterday, Monday, I set my automatic trader, and my positions were filled. I did it again. This time I used the July expiring $7 put. I sold that one, and I bought the December 11 call, and now I'm just going to wait approximately a month to see what happens. Now let's talk about what the trade is worth right now. There are a couple of scenarios to exiting this position. The first one is if I just liquidated all the positions right now. And if I liquidated all of the positions right now, I'd pretty much come out with about a 40% ROI, depending on how you calculate it. The other thing that can happen is we could go outside of that trade zone. Now, if right now we went outside on the $11 side of the trade zone, our risk would stop at $4. And so right at this moment, we would have a small loss of about 93 cents or about 18% on the trade. But each time we sell this premium, this gets less and less to the point where we get a risk-free trade and we're guaranteed profit month after month. Also notable is that I actually am not exiting out of the position, but because I've got the protective call, the position actually stays in put. The call actually offsets the position's losses. So the risk stops when the underlying symbol hits $11, but the positions stay intact. The other scenario is if I get exercised down at the $7 strike price, that would give me an $8 payout, which would end right now at about a 60% gain. But the most likely outcome, because we have a trade zone between 7 and 11, is that the positions will once again just expire worthless and roll out. We'll collect a monthly premium, and we'll just do it again and again. A couple of transactions per month make this payout fine. We have a pre-recorded workshop that runs multiple times a day. It is worth you sitting through this workshop and learning how to invest in sideways choppy symbols. Symbols like TEVA spend most of their time going in a sideways choppy pattern. You being able to take advantage of that in the long term will become an asset for you. So go to optionsinvesting.org/workshop. If you have a mobile device, you can go ahead and scan the QR code on your screen right now. Go register for that workshop, download the handbook, take a moment out of your time, learn something new, learn how to invest in sideways choppy candidates for the long term like TEVA Pharmaceuticals. If you have any questions, feel free to give us a call at 970-266-8146. And of course, if you'd like to check us out anywhere else, here are our websites for our YouTube channel, our podcasts, our Facebook, our Twitter, our articles, our white papers. If you want to contact us directly or if you want to phone us, please visit optioninvesting.org/workshop. Take care.